Good morning, welcome to the presentation of the Viscofan Group's first half results. Our activity in the first half of the year was marked by two major lines of action. Firstly, in commercial terms, we have carried out initiatives aimed at increasing the selling prices as per the new cost circumstances. We have also kept fulfilling the demand for greater volumes in all of our technologies. Secondly, we call for the best productive results possible of ourselves, both in terms of savings and productive efficiency. In this context, special mention should be made of the work done in Caseta to commission the new plant with fibrous and cellulose technology. It is safe to say that Viscofan is already a different company to the one that began the strategic plan. Last year, we were able to build a new plant in a record time. And during the first months of 2018, we have worked hard on testing and production to adjust the productive process. Results are very satisfactory. I would like to highlight that our productive process is very complex and depends on countless variables. We are talking about new technology that had not been developed at the industrial level and that had to be adjusted to adapt to our customers' requirements. We had a twofold goal: to improve efficiencies and to offer a better product to the market. In this regard, our best feedback is the response from our customers. We have closed first sales in May and have had regular orders ever since. This project has been sized to replace half of the group's cellulose production capacity by 2020. As such, even though the results have been very positive in terms of productive efficiency in this initial phase, the output is naturally too small to absorb the fixed costs derived from this new facility. Results of the first phase are excellent. We have already started the second phase and are investing to install new machines with this technology. This is also a significant investment of around 20 million euros in this year 2018, and it will enable us to reach greater critical mass and savings in line with the project drafted under the more-to-be strategical plan. Outside our core casing business, as we have announced before, we have reached an out-of-court agreement to end our litigation with Crown regarding the use of a patent developed by the yarn, the vegetable division. When we sold the yarn in 2015, we agreed to uphold the possible outcome of this litigation. For this reason, both the compensation received in January and this agreement have been posted as non-recurring results for the Viscofan Group. Our P&L recorded a gain of 8.2 million euros in the first quarter, an additional 6.3 million in the second quarter, after non-recurring expenses have been deducted. This agreement ends all disputes related to this patent. Intense commercial activity and good operational performance, although the results from the first half of the year are still affected by the marked deterioration of currencies against the euro, especially the US dollar and the Brazilian real. Revenue amounted to 386 million euros, 1.2% lower year-on-year, albeit it represents an increase of 3.5% in like-for-like terms, if we exclude the currencies and acquisitions. Recurring EBITDA has gone down by 14%, again mainly due to currencies. In like-for-like terms, this will represent a decrease of just 1.5%. After we add the non-recurring positive results, the cumulative EBITDA is 109 million euros, 6% less year-on-year. In the second quarter, reported EBITDA is 55 million euros, down by around 12%. If we consider that we also had a positive non-recurring result of 6 million euros in 2018 because of payments derived from a fire in a small warehouse in Germany. This means that, again, the quarterly drop is mostly due to the adverse effect of the currencies. All in all, consolidated net profit for the first 6 months of the year is around 66 million euros, which is slightly lower than the net profit year-on-year. As I mentioned at the beginning of the presentation, the first half of the year has been marked by the intense commercial activity, because the casing market is still growing and Viscofan is in a very good position to capture and lead the market's growth in all different technologies. Unfortunately, this commercial success is not translated into the consolidated revenue figures, since we are still facing a very adverse currency scenario. Year to date, currencies have reduced our revenue by more than 26 million euros or 7 points of growth. A note should also be made of supralon companies added to the group. With 8 million euros in sales, they contribute with around 2 points to the increase in the group's sales. As you can see on the screen, revenue growth has accelerated in the second quarter, starting with casing volumes, which have grown by over 4%. All casing families are growing when compared to the previous year, even after a weak cellulose performance in the United States. In this regard, it should be noted that we have registered double-digit growth in collagen, fibrous, and plastic volumes in the second quarter. Also, revenue from cogeneration keeps growing in line with the increased cogeneration prices. The exchange rate context is still negative for our consolidated accounts. However, its weight is less significant as compared to its impact on the first quarter. In all, quarterly revenue has grown by 1.1% and 4.6% in like-for-like terms. We have grown in all casing families, but also in all reporting regions like-for-like sales. Latin America has grown significantly with over 8% like-for-like terms. However, the 17% depreciation of the Brazilian currency means that revenue has gone down by 7% to 55.5 million euros as reported. Europe and Asia volumes keep growing significantly, mostly boosted by Western and Eastern Europe and the countries in Southeast Asia. In North America, revenue has gone down by 10% year-on-year because of the US dollar's weakness. However, in like-for-like terms, revenue figure is stable when compared to the previous year, thanks to the recovery in the second quarter. There's major competition in cellulose in this area, while we keep working on developing high added value and collagen products. One such example is the launch of Vispice, the ingredient transfer products based on the experience gained with the acquisition of Transfer Pack in Canada early this year. So, revenue has shown positive performance in the quarter with a new record high of 198 million euros, boosted by casing and cogeneration. As such, we expect revenue to keep accelerating in the second half of the year after price increases agreed with our customers have been fully implemented. With volumes performing well, Viscofan Group has also been facing major operational challenges. Firstly, there's great pressure in terms of the cost of raw materials, especially caustic soda and glycerol, with prices going up by more than 40% due to the scarcity of supply. Also, as I've mentioned at the beginning, the new plant in Caseda requires more personnel and involves other plant costs that naturally cannot be absorbed in the short term. However, productive efficiencies in the plants are improving year on year, generating savings and decreasing the need for other operating expenses. In all, like-for-like EBITDA has gone down by 1.5%, while the reported EBITDA has dropped by 6%. Also, amortization expenses have gone up by 9%, in line with the expected increase after the start of the new plant in Spain. In short, the decrease in year-to-date recurring EBITDA is almost completely explained by the impact of currencies, which bring the growth of EBITDA down by more than 40 million euros or more than 13 points of EBITDA growth. On the other hand, in 2018, we benefited from 14.5 million euros from the compensation and the out-of-court agreement for the patent use. Even though the currencies have reduced the year-to-date EBITDA, variation of some currencies in the last few months, particularly the US dollar and the Czech crown, have led to positive exchange differences and the resulting recovery of part of the operating losses under the respective heading. All in all, net profit amounted to 65.7 million euros, down 0.7%, when compared with the first half of 2017. The group still holds a very solid balance sheet position. As such, it has been able to carry out such large projects as the proposed disruptive change to the viscose-based casings, which means high capex level with 30 million euros in investment until June and 75 million euros expected for the whole year. Net bank debt amounted to 70 million euros, up from 41 million at December 2017. This was due to investments, the greater need for working capital, also associated with the startup of the new plant, and to the increase in shareholder remuneration paid in June. In short, half-year results show that we are still progressing towards our goal of leading the casing market in the 4 available technologies. And this goal is increasingly closer since we now have the new plant in Caseda and have registered good results. This internal and strategic improvement is still not shown in the income statement because exchange rates are significantly reducing revenues and EBITDA. The market is still very dynamic. Also, we have already negotiated most of the price increases we had expected for this year, and this will counteract the pressure on the cost of raw materials and other expenses in the second half of the year. As such, the group is in a good position to be able to meet its goals for 2018, albeit this is a commercially and operationally challenging year. This is how things need to be. We need to be able to combine our expansion in the market's growth and our ongoing goal technological transformation, without losing sight of operational excellence across all regions where we have presence. This is an ambitious goal, likely the most ambitious goals in the sector. Our current results in terms of revenue and operational improvements encourage us to keep moving our activity in this direction and to fulfill our guidance for the year. Thanks very much for your time and for your attention.